Good morning, everyone. It is Friday, April 7th. Welcome to Yahoo Finance Live. I'm Brad Smith alongside Seana Smith and Brian Sozzi. Happy Jobs Day to all of you watching and everyone here on the desk as well. We've got a lot to discuss here, even as we are waiting for these numbers to cross. That comes at 8:30 a.m. Eastern Time. We're just about 5 minutes out from that point here, and we've all been waiting for exactly where this report comes in, especially on the backs of some of the other economic data that's come through over the course of this week, Seana.
Yeah, certainly, Brad. And we're starting to see maybe some signs of cooling here within the labor market. We got the JOLTS data out earlier this week, the ADP print, both lower than expected here. The ADP print coming in 145,000, well below what the street was looking for. We also had that JOLTS data, job openings below 10 million, just below it though, 9.9 million, the lowest level that we have seen since May of 2021. So some signs that demand is moving maybe more in line with supply, although of course you can argue that we have a ways to go in order for it really to materially maybe impact the inflation fight in the long run there.
Yeah, this is, I don't think how the Bulls or what the Bulls wanted to see to kick off April. ISM missed, JOLTS missed, various economic data indicators we track here at Yahoo Finance also missed. Disappointing start to the end. I am watching this chart here. Let's throw that on the screen here. Looking at really the increase in interest rates alongside GDP. And I think this is very important to keep in mind as we get this jobs number coming out. The Federal Reserve has aggressively raised interest rates over the past year, and that is starting to influence GDP, starting to influence the job market, I think. And as you start to pick apart this jobs report, guys, I think you need to keep, of course, in the backdrop what all of this means to Federal Reserve policy.
You know, one of the charts that I've been keeping a close eye on here is labor force participation. And that labor force participation rate, we had seen that in the previous month come in at 62.5%. Now, particularly, one thing that we should also note is that there was some interesting data that had actually come out that talked about the participation rate actually being higher than the pre-pandemic level after adjusting for aging and excess retirements. And so with the examination of some of the retirements within age groups in more detail, it suggests that the retirement shares by age group have risen only modestly. But all of this considered, if we did see a real labor force participation rate that is actually higher than that pre-pandemic, then it could issue for the Fed, or at least signal for the Fed, that there's still a lot of strength for them to be continuing with their policy pathway forward at this point in time. And that's something for us to continue to keep an eye on where this ticks either upwards or downwards in this coming report here today.
Yeah, certainly. And it's also going to be interesting once we dig into the sectors and see what sectors are hiring and what sectors we're seeing some job reduction there. When we take a look at the ADP print within the private payroll sector, the wage growth there coming from leisure, hospitality, no real surprise. Construction also making up a bulk of that hiring. Wage growth obviously will be a huge focal point within this report. The expectation there month over month, again, of just about 0.3%. Year over year, 4.3%. That would be down from the prior print that we got of 4.6%. But of course, the big question is what this print is going to mean to the Fed, how Jay Powell, the rest of the Fed officials are going to be looking at this print and whether or not it's enough to maybe do one more hike and then keep it there for a little bit.
Not to get completely wonky and hopefully not boring. Against the backdrop of this report, let's zoom out and think some longer term things here. That is AI. We've been talking about AI a lot over the past 2 months and the stocks and the movements. And let's keep in mind that all this move towards new levels of artificial intelligence is likely to impact the job market in some manner. Is it this report? No. Is it the next one? No. But that is also an undercurrent to a lot of the companies that I talk to, a lot of the executives that I talk to. They are figuring out how can they use this new level of artificial intelligence to require less workers. And I looked at Walmart Investor Day this week. They came out with a beautiful new facility, automation, fewer workers.
And think about the areas that would start to show up in these figures. Even as we were thinking about some of the ADP data, manufacturing down 30,000 jobs in the most recent month. No doubt, artificial intelligence, robotics hand in hand, and in the manufacturing processes, you could easily see where that could take on a role in the future. Even in financial activities and some professional and business services, those jobs could be at risk if there is more of an artificial intelligence or at least a generative AI layering in to some of the existing responsibilities in the name of improving productivity at the end of the day.